I'm about to give you some questions to ask yourself to determine your trading style. How do you know your trading style? Or another way to ask that is, do you know what your trading style should be based on your personality? We are going to go into some of that. I also love that AI can't spell correctly, but I think it's a good image just to throw in a presentation. Let's get going. All information in this video is for educational purposes only. It's not an offer, recommendation, trade future stocks, options, or Forex. All right, first off, styles of trading. You may or may not know what these are already. But these are things, and we'll go through questions to help determine which one of these you may be. Day trading, opening and closing trades within the same day. The only thing that's very specifically to day trading would be scalping. Scalping, by definition, is pretty quick in and out. These other things like breakouts, mean reversion and momentum could also be under day trading, but those also can go into higher time frames. I mean, something can break out on a 1-day chart, something can break out on a 1-minute chart. And the same goes for mean reversion. Same goes with momentum. You can get intraday momentum on a trend day, and maybe you just want to ride that. And then swing trading, I would say, is the difference between momentum intraday, and then once you go further out in time frames, kind of hopping in ideally with some momentum will be swing trading. And then of course you have buy and hold, which is investing. That's not trading. If you're going to buy something and hold it, by definition, I'd say it's not really trading. So those are some of the different things, different styles for trading. And so here's some questions to ask yourself to determine which one of these you may want to do, or if you want to do multiple. On that note, I think it is good, the idea of being able to do multiple, having different setups for different style markets, because the market does change over time. Not every day is the same. Most days are not the same. And, if you can only trade intraday momentum, but you're stuck in a chop zone, you'd probably be better off having a little mean reversion in your tool belt. So I would start with one before you start getting, but I would master one before you start throwing in other styles. And these are some questions to consider. How much time will you be able to spend trading / as a day job? So, how much can you be at your screen trading? Of course, there are alerts that you can set with indicators or price levels or something, where you can get an alert for a certain thing and then open the trade and walk away and just let it be. So you don't have to sit there and stare at the market all day. You can still day trade based off of alerts and not do that. But if you want to have any ounce of discretion or day trading, I do think it's, unless it's fully systematic, you are going to have to commit some time to be at the market and determine what you're going to do. So you got to say, how much time do I want to spend doing this? Day trading is obviously going to take more time. Swing trading, not going to take a lot of time. You can open the trade and set your stop loss and maybe a profit target and go do your day job. So there's different stuff. Risk tolerance and comfortability with volatility. I think this goes more so with style, but also what product to trade. For instance, if you're going to trade an index and you have risk tolerance or comfortable with volatility, NASDAQ may be for you. If not, you may want to trade the Dow. It typically has less volatility, or even the S&P has less volatility than the NASDAQ. So you have to ask yourself, how much do you want swings? Moves in NASDAQ can happen very quickly. Big swings, and that can be great if you're on the right side, but it can be horrible, and you can blow up if you're on the wrong side. So what are you comfortable with? And then that is a whole nother lesson of risk management and entry and a whole lot of other stuff. But just to know the volatility of the product relative to how much volatility you are willing to have. Are you patient? If you're day trading, I think it'll be easy to not be patient. But if you first ask yourself, am I patient? And your answer is yes, well, that's great for all styles of trading, actually. But I think it's crucial for day trading to wait on the right entry, and then letting the trade play out. If you close too quickly, if you have a scalping system, that's one thing. Again, your patience is going to determine. If you're mean reversion, you got to wait until you got a good zone, overextended or oversold or something to hop into a trade. So, are you patient? Is very important to know. Are you decisive? Day trading is going to need a little more decisiveness. If you're swing trading or doing some longer term, once you enter a trade, if you're indecisive, it'll keep you in the trade a little bit longer. Ideally, you're going to have a little bit of decisiveness if you're going to be active at all. If you're not buying and holding, you're going to have to be decisive. But the smaller time frame that you go down, you're going to need to be more decisive, because you're going to be, the smaller the time frame, the more opportunities, at least it'll look like opportunities. So you have to decide if you're pulling the trigger or not. And then, of course, that only comes after having the patience. So those are important. Do you like to go against the grain? This could go, you have to look at your personality for this. I think it's important to match your trading style to your personality. If you like to go against the grain, in politics, if you like to, argue, if you are a lawyer type person, if that's how you think, if you're an Enneagram 8, a challenger, if you like to challenge the status quo, if you're that kind of person, you may want to be a mean reversion, because mean reversion by definition is something that's going up. You want to get short it, because you think it's going to go back towards the mean or towards the average price. The market does mean revert a majority of the time, at least on a smaller time frame. Of course, there's breakouts and extensions. That's how the market moves over a longer period of time. But if you like to go against the grain, mean reversion might be for you. And if you don't like to go against the grain and you like to be maybe more of a crowd thinker, you want to swim with the tide, you want the wind at your back, maybe you want to be a momentum trader. These are just questions to ask yourself and think through these things. How long do I want to be at my computer? Again, this is very similar to the first one. I won't talk through all of it again. I was just writing down a lot of points here. And do you want to do it to make a living, or are you just trying to earn extra income? Do you want retirement growth? Retirement growth leans more towards the buy and hold. Extra income, you could be swing trading, you could be scalping, or do you want to make a living? How much time do you want to spend at your computer again? Do you have do you have access to enough capital to make a living doing it? If not, then day trading doesn't really make sense. You should only day trade if you can make a living doing it. Other than that, outside of that, you'd probably be better off making money at a job and swing trading or something like that. So there's just some things to get you thinking on what style. Remember, I'll go back to the styles. There's day trading. Within day trading, there's scalping, breakouts, mean reversion, momentum. Scalping, you're just in and out really quick. Breakouts, you're looking for things to break previous highs, break out of a zone, and hopping in with that. Mean reversion, if the market's going up, you want to hit it back down. That's kind of the going against the grain type person. Can be very fruitful if you're good at it. And momentum, similar to breakouts, momentum usually comes after a breakout. I guess, and that's just running with the tide. Swing trading a little bit longer term, but finding a good entry point and holding it for a little bit longer. That could be hours to weeks, months. And then buy and hold is long-term investing. If you don't care to sit at your trade and do all this, there's plenty of stuff on companies or ETFs to buy, some portfolio management thoughts. That's a whole different situation. So these are some things to think through if you are looking to figure out what style of trading best suits you.